the Financial Education Manager at Money Management International. I'm really excited to be here with all of you virtually to talk about some very, very relevant and very timely information. But before we begin, I do want to hand it over to the president of Union Plus, Mitch Stevens. He should be on the line, and I believe he has a couple introductions and a couple words that he wants to say. Mitch, are you there?
I am, Jay. I assume you can hear me okay?
Yes, yes. Thank you so much.
Thank you. Well, good afternoon, everybody. I'm Mitch Stevens. I'm the president of Union Plus, and I'd like to thank everybody for participating on the call today to learn more from our credit counseling partner, Money Management International. And I want to thank them for pulling together this information. I know from yesterday's sessions that there's a lot of information that's about to come. So this is a good opportunity to grab a pen and a pad and a pencil to take some notes because Jay's going to throw a lot at you. Another comment I'd like to just make is I know many of you are actually working on the front lines here to battle this virus and are also working on essential businesses and putting yourselves at risk. So, we want to thank you for that. We certainly appreciate what you're doing and appreciate your efforts and hope that you can do your best to stay safe every day. Jay's going to take you through some of the hardship help that Union Plus has available for union families. The first category of that is a bunch of general resources that we have, and we'll kind of go over those today. And there's a second category, which is more limited to folks that have specific products with us, so the mortgage or the credit card programs. If you have those through Union Plus, there are additional financial resources that can be available based on your situation to help you out. So we'll touch on both of those categories today, and hope that you find the information today useful. And with that, I'm going to thank you for participating. I'll hand it back over to Jay to take you through the materials. Thanks, Jay.
Thank you so much. Again, my name is Jay McCoha, Financial Education Manager at Money Management International. And I would like to extend another thank you, not just for joining us, but again, like Mitch was saying, a lot of the participants that we've spoken to, and I imagine several of us on the line now, are either working in essential businesses, potentially impacted by this global pandemic, or again, you could just be looking for some information to get you from point A to point B along your financial journey. So I definitely appreciate everyone's time and attention. And those who are employed in essential businesses, I can't thank you enough for how you're literally keeping the country moving. The first thing and kind of the through line between everything that we're going to discuss today is the notion that you are not alone. A lot of times, it's easy to feel like we are alone in these times, like the issues that we are dealing with financially, in our health, and all of those things can make us feel very isolated. But of course, you are not alone. We are all in this together. These are unprecedented times that will require us to take stock and utilize the resources around us, whether you experience a layoff, reduced hours, or loss of income in tips, or increased financial expenses. Many, many organizations are rallying to help those impacted by coronavirus. And that includes government, state, and local programs, as well as many of our creditors. Knowing where to go for help, what to ask, and how to document your situation are all key aspects to get the help that you need. Today, we are going to talk about 4 main strategies around managing your finances during and after the global pandemic. We will talk about how to analyze your available resources to keep your household running and to get help that you may need. Next, we'll look at priority-based spending and resources we've identified. Then we'll talk about how to work with your creditors to ask for forbearance or payment arrangements or other options. And lastly, we'll talk about implementing a recovery plan based when the pandemic is over and your finances are getting back to normal. Like Mitch was saying, it is going to be a lot of information. If you have a pen where you're at or a pad or some way to take notes, I would definitely recommend jotting down some nuggets. I will take a couple pauses throughout the presentation to open it up for questions if something comes up. I'll also be monitoring the chat box. So either way, you can type in a question, you can chime in at the appointed times, or you can ask your questions after we finish the presentation. Many of you probably have heard the term beast mode. Usually when people are talking about beast mode, it's sport and competition. I like to go to the gym. Obviously, I cannot go to the gym regularly now, but I try to be athletic. But right now, we need to put ourselves in beast mode as we tackle our finances. And that means we're going to explore all of the options, maybe have to make some hard choices, and have important conversations in our household because we all have one goal in this, and that's to get through the current crisis with the least possible impact to our families, and that includes our family finances. So we'll put everything on the table and do what it takes. I can't stress enough how important it is to truly be honest. Granted enough, you're not going to be talking to me right now about your specific financial circumstance. But when you do have those questions, those conversations, whether it's with a creditor or or your spouse, or in some cases it might be with your whole family unit, it is critical to be absolutely honest with yourself and how you're communicating about your finances. And that, my friends, is the first step in going beast mode. The current situation, as far as the pandemic is concerned, is constantly changing. So it'll be important to stay connected to ongoing updates and also to openly communicate at home to make sure your family members are on the same page. Usually the first thing when a family or a client comes to me for counseling about improving their credit worthiness or perhaps developing a budget, the first thing that I ask is what's important to you? What are your values? And have you written them out recently? If there's one thing I would hope that everyone would take away from this is maybe it's time to write down our values list, especially since given our current circumstance, because our values now might look very, very, very different from our values when our finances are normal, when our employment situation is more consistent. But those top 4 or 5 values probably are going to be really easy to rattle off. It's probably going to be something around, I want a roof over my head. I want my family and loved ones to be safe. I want food on the table, clothes on my back. Those are usually the easy values to enumerate. But when you get down to number like 22 on the values list, they get a little more interesting. And usually they're a little more seasonal. For instance, it is April in Georgia, and I am a Texan. And so right now, Zyrtec, Claritin, those are pretty high values to me. I feel like I can't breathe without them. But that's very different than what my values would look like in December when it's cold. So it's important that before we start, when you have this family meeting, we need to understand exactly what's important to us. And then you can start to analyze your resources. Having a family meeting is a good step. Include the kids in the discussion about the current situation, about what's important to us as a family unit, and how the situation is affecting our everyday life. While we don't want to frighten or burden our kids, we also don't want to keep important information from them. If you have older children at home, which many people do, it might be necessary to have them contribute a little more to using their own money for everyday expenses, whether it's money they saved from a job or have savings or gift money they've received. And if that's the case, you can set up a tracker so that when you do use this ready cash on bills, you can make the commitment to pay it back once your full income is coming back in. It may also be necessary to forego some expenses that everyone in the family may take for granted. I will tell you, I never realized how important the internet was until this pandemic hit. Like, I didn't realize everything I use the internet for. I didn't realize, how much internet I use when I'm home. And now that I'm not stuck home, but now that the recommendation is for all of us to stay home, that might be an expense that I would have taken for granted before. But the flip side of that same coin is I realize now with my internet being so in demand in my household, I don't really have that much use for cable. I might have watched one show when things were normal. And while I love my internet service because I Netflix and Hulu and all of those things, I might need to cut that cable or make some different decisions. It's important to have those conversations so we can all be, as a family unit or a household, on the same page. But more importantly, we can start really thinking critically about what we have, what we need, and things that we may be able to do without for during this temporary situation. And now that everyone's on the same page and the lines of communication in the household are open, it's time to analyze your resources. Right now, you may not think you have any resources to analyze, but you probably have more than you think. So let's look at a couple ways you can find and leverage cash and community resources to get through this very unique time. Union Plus offers some emergency assistance to positively impact your situation. If you have a Union Plus credit card or Union Plus mortgage, we'll take a look at some of the resources here. If you have a Union Plus credit card or a Teamsters Privilege credit card that has been and meets the eligibility criteria, you can apply for a $300 job loss grant. This $300 is applied directly to your credit card as a credit, and it's a grant, not a loan. That's key. It's a grant, not a loan. Wait, I'll explain. So that means it doesn't have to be paid back. And the qualifying time frame for the hardship assistance has been recently changed due to the coronavirus outbreak. And layoffs and voluntary job losses that occur between March 1st and September 30th are subject to the same requirements, with the exception that during this period of time, the consecutive day requirement is reduced from 90 days to 45 days. So you'll see here, bullet point number 1, Union Plus credit card holder for at least 3 months in good standing. And point number 2, continuously unemployed for at least 45 days. Previously, that was 90 days. So because of the current health climate, it's been reduced to unemployed for 45 consecutive days within a 12-month period. You're able to apply for a $300 credit that is a grant toward your Union Plus credit card. If you're a Union Plus mortgage holder concerned about making your mortgage payment due to layoffs, the Mortgage Loan Assistance Program allows you to receive up to 6 months of your mortgage payment as a loan from Union Plus. Union Plus will pay the mortgage, and once your regular pay resumes, you will repay the loan at $100 per month until the loan is repaid, and this loan is interest-free. The mortgage loan comes with a $1,000 loan forgiveness component. So let me reflect it back to you so I make sure we're all on the same page. Let's say, hypothetically speaking, you have a Union Plus mortgage that is $1,200 per month, and you receive as a loan 2 months of your mortgage payments, $2,400 total. So the first $1,000 of that $2,400 loan that you received is forgivable as a component of the Union Plus mortgage loan. So the first $1,000 they will forgive, and then the remaining $1,400 you can pay back interest-free at $100 per month. So essentially, in 14 months, you pay back the loan in full. I think that's pretty dope. If you have one or more out-of-pocket medical bills, for instance, over $400, the medical bill negotiation service may provide free assistance negotiating bill reductions with physicians, hospitals, and other medical providers. This particularly piqued my interest because a little about myself. I have a family member, a very, very close family member, who worked in the medical setting in a hospital. And so she is not she's not a doctor or a nurse, but she definitely is employed in the hospital. And she had symptoms that were that may have been associated with COVID-19. And so for a couple of days, she was a person under investigation. That's what they called before, when you have similar symptoms but have not had a positive diagnosis. Fortunately enough, she did not have coronavirus, but because she was a person under investigation, there was all of these tests in addition to the coronavirus tests that were associated with her care. Now, while we are close relatives, she's not a household relative, so I don't know exactly how much, but I do know that she incurred a medical bill over $400. And the hardest part about that circumstance is you get this medical bill, you or a family member was just sick, and so your mind isn't focused on how am I going to pay this. Your mind is focused on my loved one needs me, my loved one is in pain. And this particular incentive, this particular resource will have someone else advocate on your behalf to potentially reduce your unreimbursed medical expenses. So if you have at least one outstanding unreimbursed medical expense of $400 or more, you can utilize that medical bill negotiation to potentially reduce the outstanding payment. There is no limit on the number of medical providers or the service will negotiate with, but you do have to have at least one outstanding unreimbursed medical expense of $400 or more. I want to make sure I stress that component. You can find out more about these benefits at theunionplus.org. From there, select Hardship Help at the top of the page for a list of benefits. And then, if you're not a Union Plus credit card or mortgage holder, there's still a whole lot of options to assist you. If you have emergency savings put away, now might be the time to think about using it. I know that from counseling individuals and families on a regular basis, as well as my own financial life, that once you start building that muscle, I kind of got addicted to seeing a certain amount of money in my emergency fund, in my savings account. And then I got in the routine of contributing to that savings account on a regular basis. So once you have kind of like this routine of save, build, which is a good thing, it sometimes feels just a little weird to not have to go dip into that money. But this might be the time to think about touching your emergency savings, because a lot of families are dealing with some very real emergencies. It can be hard to dip into your savings, but it could help you avoid creating debt. To handle necessary expenses while your income is reduced. If you do use money you put away, it'll be important to maintain your adjusted budget once your income gets back to normal. When you reduce your unnecessary expenses, you may need to keep your budget the same way. You might not go right back to normal as soon as you go back to work or you're working full time again or things of that nature. You might need to have your adjusted budget in place for a little longer, so that you can replenish your emergency savings. You may also qualify for unemployment benefits. This is particularly important to me because in my household, my partner, he works in retail, and he was recently furloughed because of the coronavirus pandemic. We had not expected this. He is in management at his job, but he works in a mall, and with malls closed, we had to figure out something new. And so the Department of Labor has new options for states to amend their unemployment laws to provide benefits if your employment has been impacted by coronavirus. What has been passed in the stimulus package is unemployment, depending on your state, unemployment benefits are extended by at least 6 weeks, up to 6 months, and most Americans who file for unemployment benefits qualify for up to $600 additional as additional unemployment benefits. So I'll give you an example. If I make $1,000 a week when I'm working full time, and I live in Georgia, so my state says that I qualify for $400 a week in unemployment benefits. The stimulus plan that was recently passed would provide me that additional $600 to where I can hopefully match my weekly take-home pay when I'm working. It is not available to everyone on the same level, at least, but that benefit is available to those who qualify for unemployment benefits and who qualify based on your state as well as based on your income level. So up to $600 and between 6 weeks and 6 months of additional unemployment insurance is available, again, depending on your state. I would recommend consulting with the Department of Labor. CareerOneStop.org, sponsored by the Department of Labor, is a great website that has more information about unemployment benefits and also a tool to help you identify eligibility and file for unemployment insurance benefits in your state. In our instance, I live in Georgia, and my partner, he applied for unemployment benefits 3 weeks ago, and he has not seen the additional stimulus component of his unemployment insurance. And so it rolls out at different times at a different rates for different places. Definitely stop by CareerOneStop.org. I have heard that if you try to call the Department of Labor in your area, the Georgia Department of Labor or so on and so forth, there's longer hold times. Some people are not able to get through. So Career One Stop really is, I would recommend it as your first stop in understanding your eligibility for unemployment benefits. If your household regularly has more than one income and only one person has been affected, there are a couple ways to temporarily increase your take-home pay of those still receiving paychecks in your household. Review your withholding selections and temporarily adjust them, especially if you have been receiving income tax refunds. I will tell you from personal experience and from those who I counsel, most of us probably have a pretty good handle on what gets deposited in my bank account. After Uncle Sam gets his piece, after Social Security or retirement, maybe you might have child support or other things that come out of your paycheck. After all of your deductions are done, most of us know or can pretty clearly estimate what the paycheck's going to be. And most of us know what our salary or our hourly rate is. So we know our gross and we know our net income. But those deductions in the middle of the year, usually in April or July or summertime, most of us really aren't thinking about those. I know I'm not, because I've gotten in the routine of my health insurance is coming out. Maybe you've got a 401k distribution or things like that. So most of us don't really pay attention to those deductions, but now might be the time to reassess. And you can temporarily change your deductions usually pretty easily. Those who still have paychecks coming in and can make an adjustment to your W-4 anytime, you can do this by contacting your payroll department. And in many cases, you can do this yourself by logging into your HR system and completing a new W-4 electronically. Now, I would recommend if you have specific questions about what deductions to claim or what exemptions to claim, you need to speak to someone in your payroll department. Also, if you pay state income tax, you can review both your federal and your state level withholding. Similarly, the others in the household may be contributing to a 401k, a 403b, an IRA, or other retirement account, or using payroll deductions to put money in savings account. Now might be a good time to examine those deductions and consider stopping them temporarily to bring more cash flow into the household. I want to put a quick pin here specifically about 401ks or government-sponsored retirement plans. There is a huge difference between stopping new contributions to your 401k and taking a loan or withdrawal from money that's already in your 401k. A loan or withdrawal potentially has financial consequences. It might trigger taxes that are unexpected. It might trigger penalties that you might not want to pay. And so stopping new money from going into your retirement account is very, very different than taking a withdrawal or a loan against money that's already in there. If you do have questions about that, I would recommend speaking to your HR representative, or you may need to speak with your 401k or your retirement account servicer or the bank that it's with. But again, those are two very, very different things. And what we're talking about here is potentially adjusting or stopping temporarily from contributing new money to a retirement account. If you're a small business owner, you may be eligible to apply for a low-interest disaster loan through the Small Business Association. The SBA is working with states to provide targeted low-interest loans to small businesses and nonprofits, and that has been severely impacted. You can visit sba.gov for more information about that. Many banks are offering assistance in making policy adjustments. Bankrate.com has compiled a list that will be updated regularly of financial institutions offering support. You can check there, and it also is a good idea to contact your creditors directly. We'll talk about that a little more in a moment. While we're on the topic of banks, let's talk about using credit cards to pay bills. I know that a lot of us could potentially be in dire straits, and so understanding that credit cards are available, but just know that credit cards are generally one of the more expensive ways to close the gap between your income and your expenses. The interest can really add up. So if you must consider using a credit to get through the crisis, you may want to start with a low interest rate options like usually your bank or a credit union loan rather than a credit card. And you may also be tempted to take money out of your retirement plan, as I was speaking before. Unless you're 59 and a half, this will have a 10% early withdrawal penalty and could also have a tax penalty. Many plans also offer loans, but there are different considerations depending on your situation. Start to look at these type of loans and withdrawals only if absolutely necessary. There are myriad of other options, other resources available to get us through. School districts are providing free meals at school pickup locations and or bus stops, some school districts. If you have school-aged children, contact the school to find out if this is an option where you live. Many utility, phone, and internet providers are also offering help, either by suspending disconnections and fees, offering payment assistance programs, or even offering free access to the internet in some areas. Contact your service providers or search utility assistance from United Way. I'll put a pin here as well. Contacting your service providers or creditors is going to come up several times in this presentation. What is key is if you feel that you could potentially be falling behind, you may not be able to make your next payment, things like that, it is going to fare better on your behalf if you contact a creditor before there becomes an issue. Creditors, account holders, account servicers are a whole lot more likely to help you for a future occurrence or a future situation and create a plan that works for you than they are if you're already past due. So I would definitely take seriously contacting your creditors before they start contacting you rather than after. After is okay, but before is better. United Way Worldwide has created a COVID-19 Community Response and Recovery Fund to support local United Ways and 211, which is their resource for information in times of crisis. You can visit 211.org/services/COVID-19 and scroll through for links to available resources. You can also search to find your local United Way and specific resources offered where you live. Things are changing rapidly now, and new options are being offered all the time. Like I was mentioning about the stimulus package and its impacts, I know that some of my clients have started to receive stimulus checks for up to $1,200 for individuals, up to $2,400 for couples, and up to $500 for children, as long as you make less than $75,000 to $99,000 a year. You can visit, so to keep up with your state and local news here at MMI, we're dedicated to providing regular updates to help consumers navigate through these unprecedented times. You can visit us online at moneymanagement.org/coronavirus for regular updates and to sign up for the Success newsletter for ongoing tips of creating income and stretching your budget during the pandemic. I will say that a couple things about the stimulus check or the one-time payment of $1,200. Now, the regulations state that you have to make less than $75,000 a year to get the full $1,200 for an individual. You have to make less than $99,000 a year to get up to $99,000. It will incrementally decrease. So the more money over $75,000 you make, the less your stimulus check will be. And then couples qualify for up to $2,400 between the two of them, again, if they make less than $75,000 individually or $99,000 or up to $99,000 individually. Your particular stimulus check will depend on your level of income. I just know that it's a flat $1,200 if you make less than $75K. The one thing I will say that I always tell my clients, though, is that when you're expecting what we call a windfall of cash, right now $1,200 for some of us may not feel like a whole lot of money. But when you're expecting a lump sum of cash incoming, the time to assess your finances, assess your goals, and make sure that you're making the best decision with your money is before you get it. Because if you get it, I know if you're anything like me, especially when I was younger, I tend to burn through cash. It creates a hole in my pocket, and for some reason it goes places that I can't remember. But when I have a plan for it, I can make sure that it goes to the right place. So I would definitely recommend do that values list, assess your budget, and then here you'll be able to be a good steward of that for your financial journey. The next step, once you take stock of your resources available, the next step is to evaluate your budget and create a priority-based spending plan. For some, this may sound easy, but it can get hard. We become accustomed to living a certain way, and sometimes the line between what we want and what we need can get blurry. It's time to go into expense reduction beast mode. This might not be fun, but it's necessary. I think of it like eating spinach. It will help it'll help to have your family all on the same page about tightening the budget and reducing expenses. Start by taking a hard look at your expenses. Priority expenses include things like your shelter, food, utilities, insurance, transportation. Remember those things at the top of the values list. They're usually very easy to identify. These are must-haves, but even priority items resist the urge to overspend and engage in mass buying. For instance, I know that a lot of parents must have internet access in the home so their children can stay up to date with schoolwork. And again, internet access is pretty much a necessity for most of us. But overspending at this juncture might look like maybe we don't need all those channels from the cable package, or maybe we can limit the internet, the internet plan that we have. Making some tough decisions might be exactly what we need to get through this global crisis that we're dealing with. Also, it is important to have a reasonable amount of necessities on hand, but it's also critical to be smart with your money during your crisis. When considering expenses, everything that's not a priority will need to be deferred as much as possible. Even expenses on that monthly contract might be negotiable. It may not be pleasant to think about cutting your cable apps or streaming services, but it might be necessary. I will tell you that from my own household, like I said, my partner's been furloughed. And so some of the things that are definitely necessary is we are in the market for our home, our first home. And so I can't compromise my credit standing now, but I might not be sending a double payment to my credit card bill. I might need to make the minimum payment for a little while. Or like I said, I might need to cut back on my cable and just keep it to internet only, or maybe downgrade my cell phone service or things like that. We don't want to leave ourselves uncovered, like canceling insurance or lapsing in coverage, but we may want to think about different ways of generating some savings from the expenses that we have to incur. With many gyms and activities and entertainment venues temporarily closing, now is a good time to save money on personal and entertainment expenses too. One good thing about the current crisis is that social distancing guidelines might be a great opportunity to spend quality time at home with family. Take this time to get back to the basics on free entertainment, like having a family game or movie night, cook at home, or go for a jog or walk outside. Fun fact about me, my partner didn't even know I could cook until this global crisis had started. And all of a sudden, we have chicken and all kind of crazy things. Being able to cook at home has really helped us create a whole lot of savings. Insurance protects us and mitigates risks from disasters, like I was saying, and we certainly don't want our policies to lapse. But perhaps you can temporarily increase your deductibles. For instance, most comprehensive and collision auto policies are set at $500, but a lot of insurance providers allow up to $1,000 or $2,000 deductibles. And because we're driving less, that might be a very valuable option for some of us to create some savings on monthly necessities, things that we cannot deal without. If you currently cover a teen driver, you might also consider removing them from all but one vehicle. One of my clients one time told me it's definitely a Subaru, because apparently those are the safest cars. I've never driven a Subaru, but she said if you have a teen driver, definitely get them a Subaru. You call your insurance agent and ask what they can do for you temporarily. They may have some options to postpone or make smaller payments until your financial situation changes. A lot of the resources that are available to us, we don't know or how to take stock of, but the first step is contacting them. If I think I'm going to be tight on my insurance payment, call the insurance agent and see what they can do. Because I will tell you, more often than not, creditors and the people that we have bills with and accounts open with are much more willing and able to help us, especially now, given these very unique times we're in. Number 3 is working with creditors. When you cannot meet all of your obligations, the third step is work with the people that you owe money to. We mentioned this briefly a few moments ago when we talked about resources, but working with your creditors and financial institutions could be key to helping you manage your finances and recover strong. We've already established a priority spending plan, and these items on the sticky note, like your mortgage and insurance, your car, your utilities, bank loans, etc., They are all top priority items. But what if, even after you've examined your resources to maximize cash flow, you've reduced your expenses as much as possible, you still can't make your payments or can only make partial payments? As we said earlier, many creditors are implementing programs to help those impacted by coronavirus, but it's up to you to reach out. While help may be available, they aren't likely to automatically give you a hardship plan. It's important to call and ask for assistance. Some programs are already in place to help stop evictions and foreclosures, and many mortgage servicers are offering help in the form of hardship forbearance options for homeowners struggling to pay their mortgage. If you rent, contact your landlord right away and ask about rent assistance and forbearance. Same goes for student loan servicers and auto loan providers. A forbearance is a temporary reduction or suspension in payment. With this option, you'll have to pay the forbearance amount back, but when your regular income resumes, or especially in the case of mortgage loans, you might qualify for another workout option or mortgage modification to get back on track. Creditors may also offer reduced payments and fees or hardship plans. Be sure to stay up to date with ongoing changes in programs and ask your creditors about specific options you may qualify for and how they'll affect your account and your credit report. When you do talk with creditors, it's important to take note. I always make sure I write down the date and time of my call, specific time, what number I called, the name of the person I spoke to, and what I was offered and the plan we ultimately agreed to. Monitor your statements to ensure you're receiving the assistance you discussed. I will tell you that, for instance, on a car note, if I call my loan servicer and they offer me something, it is imperative that I am clear about it. And even during the conversation, I say, let me reflect that back to you. And I tell them, this is what I heard you say, and this is the impact. I need to make this payment on this date of this amount, and make sure that they get a yes or a no. Because like I said, most times the creditor has on their side, they're recording the call anyway, so for quality assurance purposes. So you need to make sure you're taking just as diligent of note so that if something does happen, if a discrepancy comes up, that you're able to contact them immediately, get it fixed or resolved, so it doesn't impact your credit worthiness. And once you do agree upon a workable plan, put together a letter summarizing the details of your discussion and mail it to the person that you spoke to. You'll find that customer service mailing address for most creditors on your statements or on the website. It matters, especially if you send in written correspondence, that you put someone's name in it. I spoke to Jay on this date at this time, and this is what we agreed to. You can send that to them. And most creditors, upon making some type of payment arrangement or a concession or forbearance, will send you something in writing as well. So just make sure that what you get and what you send are on the same page. Number 4 is recover strong. It may take some time, but things are going to get back to normal, and you will receive your regular paycheck once again. But when that happens, you may still need to work on repaying loans, bringing accounts current, and checking on your credit report and score. So let's talk about that now, and also how to build a plan for future emergencies. Once your regular paycheck resumes, pay off any loans, credit card debt, or other obligations as quickly as possible. In our other presentations, we talk about the difference between good debt and bad debt. Credit cards and consumer debt are always bad debt. It's never going to appreciate. It's never going to add value to your life, and it's never going to and it's going to cost more money to pay it back than it would have been to pay cash. So get out of consumer debt as quickly as possible. That is a tenet of being financially savvy that will extend long beyond coronavirus. So make sure that you're getting out of consumer debt, credit cards, and personal loans as quickly as possible. Pay those obligations first and consider maintaining the priority-based spending plan that you created until you've repaid the obligations you owe. If you're able to reduce your spending, maybe you might need to keep those deductibles a little higher for about a month, or maybe you need to keep that cable turned off for a little while longer. But make sure that you're not just flipping the switch back on as soon as pay comes back in. Take some time get your financial footing sure, and then you can start transitioning back to how things were before. Know your rights. If you do get behind on bills and you were already behind before the crisis began, and you receive calls from debt collectors, they still must follow the Fair Debt Collection Practices Act. They can only call between 8 and 9 p, no early and no late hours. They can't call you at work if your employer disapproves, and most employers do disapprove. They may not harass or threaten you. They can contact family members only for information on how to contact you. They can't discuss the account with someone who's not on the account. But if they need to get a better contact number or address for you, they can contact family members. And they must honor requests to cease calls. However, if the phone stops ringing, that does not mean all of a sudden everything's good unless you created some arrangement otherwise. I know when I was younger, I got lulled into believing, I don't know who lulled me because nobody ever told me this, but I got lulled into believing that if they don't call, then there's not a problem. That is not the case. Many times I've told people to stop calling me, and they did stop, but I still had that debt on my credit report. So it's important to make sure that you know your rights and everything before applies. Get everything in writing, send them a letter, things like that. But also just understand they can't treat you in any old kind of way. And you do have rights regardless of how much or how delinquent account may be. Monitor your credit report over the next 12 months and regularly each year to ensure that creditors who promise not to report delinquencies or partial payments do so. You can order each of your 3 credit bureau reports free annually. We recommend ordering each one about 4 months apart to cover the entire year. Order your TransUnion in January, for instance. Order your Equifax in May. Order your Experian in September. And that way you have a pretty good snapshot of your credit standing all throughout the year. Now here's the gotcha. Just because there are 3 credit bureaus, not every creditor reports to each bureau. Some creditors may have 10 accounts open, for instance. Some may have 5, some may have 8. Generally, they don't differ drastically, but they could potentially be different. And in addition to that, your credit score may be different from each credit bureau because the document that contributes to your credit score that they're keeping is different. Many banks and credit unions offer free credit scores, so monitor your credit score also, and you can obtain your credit score for free by going to myfico.com. And if you have negative reporting on your credit report due to the coronavirus pandemic, you can place a consumer statement of up to 200 words on your report explaining the situation. If you do choose to make a consumer statement, there's 4 key principles that we recommend. First is be succinct. This is 200 words. In our day and time, think of it like a tweet. It's a little longer than a tweet, but you only get 200 words. Tell them exactly what needs to be explained and don't try to get into the weeds on it. For example, if you are a victim of identity theft and have disputed fraudulent charges, but an investigation does not resolve your dispute, a personal statement may explain that situation. And it might be just that. I was a victim of identity theft and have disputed fraudulent charges, but the investigation did not resolve the dispute. That is a very succinct consumer statement. Number 2 on consumer statement, a personal statement does not carry enough weight to counter the lengthy series of credit problems, so don't make excuses. When writing a statement as an excuse, a personal statement can be interpreted as an admission of poor money management skills rather than as an explanation of a one-time event. So things like, I forgot to mail a check, I forgot to make a payment, stuff like that, leave that out. Don't make excuses. Number 3 is realize that your statement may not sway lenders. In a lot of cases, there is an actual person reading your consumer statement to make a credit approval or denial. However, just because somebody is reading it doesn't mean that they're going to be affected by it. Some creditors will completely overlook it as if it weren't there. But if there is a chance that an explanation about a short-term financial setback could sway a creditor, it's in your best interest to add a statement to give some context to your credit report. And the last piece is remove the statement when the information is deleted. If you're disputing something and your consumer statement is certain items are in dispute for XYZ reason, then once the dispute is resolved, remove the statement. Let's not have it on there lingering about the coronavirus pandemic in 2050. I know the last thing you might want to think about now is putting away emergency savings. And it's hard to think about future emergencies when you're in a stressful situation. But once the current crisis is over, revisit your budget as a family and commit to a pay yourself first strategy of saving. And that might be a payroll deduction. I have my savings go straight to my savings account. I don't even have to transfer the money myself. And consider putting emergency savings in a separate account that you don't touch except for emergencies. Now, we recommend that a fully funded emergency savings account is 3 months of your living expenses. So if I make $2,000 a month, for instance, 3 months of that is $6,000. And we recommend having that much money sitting somewhere in a separate emergency-only savings account. But getting to $6,000 might be a tall order, especially now, and especially when you're just coming out of using your savings because you were experienced a time of joblessness or being furloughed or reduced hours or things of that nature. And so the first step in getting your emergency savings either back or starting an emergency savings account might be a baby step. It might be saying, let's just save $1,000 this year in the next 12 months. And that is $83 a month we're going to put into an emergency-only savings account. Do that for 12 months and you get $1,000. And then once you have $1,000, let's say we're going to do it again. Or maybe you've increased your income, so we're going to say we're going to save $1,000 in 6 months. But ultimately, we believe that every consumer, every person should be working up to at least 3 months of your living expenses in a separate emergency-only savings account. And once you get there, then I guarantee you emergencies when they hit, whether it's a global pandemic or I need a new transmission, they're going to feel just a little different. And after you're back on your feet, if you still have debt, consider implementing a rapid repayment plan to pay it down. Sometimes called a debt snowball or a debt avalanche. Those are Googleable statements. Google debt snowball or debt avalanche. And you can look at using a debt repayment calculator to pay down debt as quickly as possible with the least expense. There are several websites that help you create a debt snowball or a debt avalanche plan, and many of them are free. A debt snowball isn't for everyone. In fact, some people were struggling to pay bills before the pandemic and may find themselves unable to manage all their debts once the crisis is over. If you were behind before the coronavirus pandemic and find yourself unable to make your debt payments after the coronavirus pandemic, or as a result of being affected by the coronavirus pandemic, you just can't seem to catch up, maybe it's time to talk to a credit counselor. Go to your Union Privilege Hardship Resources page to access information about the credit counseling and debt management. Money Management International, our organization, partners with Union Plus to offer special discounts and benefits to members. I can't stress enough that in these very unique times, you are not alone. Everyone is affected by what is happening right now. I am the finance instructor, the guy who talks to people all the time about improving their financial standing, and my household was impacted by the coronavirus. So we have to be in this together. Many organizations, as well as federal, state, and local government agencies, have already established plans to help, and your community has resources available also. You can visit moneymanagement.org/coronavirus to sign up for the Success newsletter if you need regular updates and frequently asked questions about as circumstances change. We hope this information has been helpful in giving you ideas on where to start and how to approach your finances during this very difficult and unique time. A little disclaimer is today's presentation is designed for educational purposes only and should not be construed as investment, tax, or legal advice. If you need investment, tax, or legal assistance, please consult a professional. That has been my presentation. I will open it up for questions, but I definitely thank everyone for your attention this afternoon. I'm going to be here for a little while to answer any questions you may have. And I've unmuted everyone, so you can unmute yourself on your end as well if you have a question. Okay, everyone. Well, I would definitely thank you for your time and attention this afternoon. I hope this information it was relevant to your particular experience. I know that this pandemic is it's unique. That's the best word I can give it. It's unique, and it hits a lot of families very, very hard. So thank you so much for your attention this afternoon, and I hope you all have a great weekend.